It does seem like apologizing is in trend nowadays, so here's my apology video. But wait, can you apologize sincerely if you don't think it's a mistake? So for the record, I'm still holding on to my Alibaba position. And yes, I've been slowly adding. Now, if we really want to conclude this journey as an investment mistake, don't you think it's a little too early? So for context, I bought my first tranche of Alibaba back at the end of 2020, when Alibaba was around probably the $220 to $240 price range. So it was a really small position because I was still in the midst of doing my research on the company. Then I released my first video about Charlie Munger buying into Alibaba on this channel on the 10th of April 2021. Look how time flies. Of course, I've been averaging down since from 240 all the way to 140. So let's see. I've been with Alibaba for a good 20 months now. So since the posting of my first Alibaba video, it has been a good 16 months. So is that a good enough time frame? I'll let you guys be the judge. So even though I don't think investing into Alibaba is a mistake yet, keyword is yet, I do wish to admit to a few mistakes in my judgment along the way. So the first mistake is definitely not smashing that like button. So don't make the same mistake as me. Also, this video is sponsored by Weibo. Every single new sign-ups can get up to 100 USD worth of Google shares. I'll leave the link and instructions down below. Essentially, you just need to deposit a minimum sum of 2,000 Singapore dollars and execute a total of 6 trades in the first 30 days. That's an 8% ROI in 1 month. Definitely better than Alibaba. Jokes aside, Weibo also allows for investing into fractional shares. And I don't know why this is not a common feature for other brokerage platforms. So they pride themselves in zero commission trading as well. Don't let this 8% ROI deal get away. Link in the description. Now, getting back to the video. Anyhow, to keep this video succinct, I'll just go through 3 key pointers that I kind of took note of throughout this entire journey. Firstly, I underestimated this bear market, specifically in the Chinese tech sector. So back in 2021, I think when you triangulate the different circumstances in the different markets, there were so many easy credit made available to retail investors. The US markets were surging all-time highs after all-time highs. The local Chinese stock market, namely the Shenzhen Stock Exchange and the Shanghai Composite Index, appreciated modestly, and even the crypto market had an incredible bull run in 2021. Then, when you pivot over and look at the Chinese tech sector, where most of them, if not all, are listed in the Hong Kong exchange with a dual listing in the United States, those fell off a cliff. So I guess crypto is worth much more than the whole Chinese tech sector combined. Anyway, given the dynamics of the environment, I definitely underestimated the bear market, and more importantly, the power of the narrative building behind these names. Secondly, I also underestimated the market's reaction to uncertainty, particularly to the valuations of this Chinese big tech. So, I think it's common knowledge for most investors by now that the quote-unquote regulatory overhang is probably the primary pressure on all the different tech names in China today. So in short, nobody has a goddamn clue what the Chinese government has in mind when they started their crackdown operations back in the later part of 2020. So for bulls like myself, we think from an incentive framework, what they're going to achieve and why are they doing it. So from there, you can make an easy conclusion that by destroying the likes of Alibaba and Tencent, we'll probably do more harm than good on the aggregate for the people, for the government, for the country. Bears, on the other hand, just think that this is the end. So when you probe them further, asking them, how is this the end for Chinese big tech? I think they don't have a solid answer as well. So I guess both sides can't really make very compelling arguments. So I think looking back, at least for the last year, when the crackdown is supposed to quote-unquote annihilate these different Chinese big tech companies, Alibaba did a 19% top-line growth for fiscal year of 2022. So I do hope that the crackdown continues to help Alibaba push for growth, because Alibaba essentially is only poised to do 4 to 5% growth this year, given the macroeconomic backdrop back in China, especially with the property crisis that's been ongoing since 2020 as well. So what exactly is the crackdown and what are their impacts? I'm still looking for those answers from the bears, but can't seem to find a satisfactory one after more than a year now. So I've recently also managed to pick the brains of a few fund managers based in China. So the consensus from their perspective are generally quite similar. Essentially, they're not afraid of Alibaba or Tencent or whatever big names out there going missing, bankrupt, or even getting nationalized by the Chinese government. In fact, they are fairly confident that they'll be bigger and more prosperous in the next 10 to 15 years. The trend, however, does seem like these big tech companies are slowly and surely morphing into a basic infrastructure / utility business. So not proclaiming that this is a good or bad thing, but the investors' profile behind these names are experiencing tectonic shifts. So the largest hurdle is always about estimating future cash flows and the certainty of those said cash flows. So at least for now, many investors are waiting at the sidelines because they're not confident in projecting future cash flows, especially for these big tech names. Who knows in the tail end event that CCP says that hey, e-commerce and frivolous spending is bad for society and decides to impose a soft cap or a hard cap on how much the Chinese citizens can spend on these shopping platforms. Doesn't sound impossible, does it? Of course, personally, I largely disagree, but I think it's a good perspective to keep in your analysis, particularly from investment managers that are closest to the ground. Oh, they threw in a kicker for consideration as well, and I quote, this is translated by the way, not a single soul in China today know what common prosperity even mean. So don't take it too seriously, at least for now, unquote. So largely speaking, uncertainty kills the cat. And God knows how many lives the cat is left with. So the last point is with regards to the CCP. Yes, the Chinese Communist Party. So I think it's quite funny how many people are hoping for the eventual downfall and the eventual collapse of the CCP, and probably or maybe a democratic savior that is going to quote-unquote save the Chinese people, whatever that means, from the oppression of Chairman Xi and his team. So from my rudimentary understanding of the system in China today, I will wager a bet that the CCP is here to stay for the next 20 years. Wait, maybe make that 30 years. Anyhow, back to the CCP. I was a tad bit disappointed in the rigor and also maybe the comprehensiveness on their policy execution front, and that is something beyond our control. So I think whenever you invest in a foreign country, whether is it the US, China, Europe, etc., you will inevitably be subjected to this risk. Government controls and policies affects the business environment deeply. From pandemic controls to asset bubbles to the stabilization of the economy, I think many investors share similar worries of China today. So it looked good for a moment in 2020, but it went downhill from there. So unless this is part of some sort of a master plan that we all don't know, if not, there are many rooms for improvements. So all in all, I'm invested in Alibaba. I still am. There were many things along the way that I probably hope have turned out better, but it didn't. I'm incredibly patient, and I don't think my underlying assumptions and judgments are broken beyond repair, like how many of them like to say. So I've gotten many things wrong along the way, and I'm down huge on this Alibaba position. But I've not yet apologized because I don't think it's a mistake yet. Just keep my apology on a credit line and redeem it later. So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!